Hello, everyone. I am so excited today to do the second in my Smash VAT series. So if you've never come across this before, my name is Charelle Griffith. I'm a business marketing strategist that specialises in helping solo coaches, consultants and online service providers to become fully booked to dream clients and then grow businesses that they truly, truly love. And I'm doing a series right now called Smash VAT, which is all about inspiring and encouraging more solopreneurs to grow their revenue and go through VAT. Because I know how so many people are purposely holding themselves back. And as someone that really believes in business growth, I want to try and debunk some of the myths and encourage people to not do that, which is why I'm so glad today to be joined by Debbie. I'm one of the only people I think in the whole world that always gets super excited about wanting to talk to accountants anyway. Like literally, I love it. But also Debbie's going to talk about some of the mindset stuff because actually it is a combination of both. And I truly am that's why I'm really excited about Debbie today, because I think it is a bit of, there is some practical things we need to be aware of, but also we need to get rid of some of those money mindset blocks around that. So Debbie, you can do your official intro to everyone who's never met you before.
Hiya. Sorry, slight croaky voice. I'm Debbie. I am a chartered management accountant and certified money coach or financial coach. I work with a lot of gyms and fitness-based businesses, and I'm just starting to work with entrepreneurs around the VAT to six-figure mark. So when I saw your post the other week, I was really excited because I was like, yes, I totally see this in business. I totally see this in people's mindsets, and it's a real kind of artificial barrier.
Yeah, perfectly. We clearly were like perfectly alive. Now, obviously, you have got, as I said, you're a chartered management accountant. So I want to just kick off with, I suppose, some of the conversations around someone that has an accountant or someone that's looking for accountant, some like the practical sides of things, because even that process, I think I did a poll that was around like what are some of the reasons that are holding you back, and people spoke about like the financial paperwork, and I know the paperwork, getting an accountant, some of that stuff is obviously a big block.
Yeah, definitely. I think there's still a real stigma, kind of old-fashioned opinion around what an accountant is.
Yes.
They're typically certain types of people and can be quite intimidating. So when I started doing videos, people approached me. It was really weird, like, "Hi, you're Debbie," and I'm like, "Hi." And they said that they liked what I was doing because I was being really honest. I was stumbling over my words a bit. Maybe wasn't using the technical language all the time, and therefore made it more approachable. But even then, people are still scared to approach me as an accountant because they think, oh God, she's going to go off talking about numbers and stuff and I won't understand and I'll be too scared to ask questions. I don't want to look silly. And that can really prevent people from taking that step with an accountant. So they try to do it themselves. They think the software is going to do it all for them. But without that initial background knowledge, there can be lots of mistakes. And I have seen some really bad mistakes. I wouldn't necessarily say it's the business owner's fault. They just made assumptions. And so, yeah, there is a real block around speaking to an accountant and starting to look at your finances. And people go, oh, I'm bad at maths. But actually, you don't need to be a mathematician to look at your finances.
Okay, so if we were someone's watching, doesn't have an accountant right now, and the thought of getting one is one of the reasons stopping them from going through that, because they're like, I know there's extra paperwork and I know I can't deal with that paperwork by myself. Have you got any advice on, as you said, there was very stereotypical views of what an accountant is, but what could be some tips? Because also I will be really honest, which is there are so many different types of accountants now, and I think like the title, and actually this is something me and Crystal spoke about in the first video, was this idea that actually the title doesn't mean you're going to get the same person. Like there actually is vast differences nowadays. So what should someone, I suppose, of that type of size, like what could they be looking for? What's something to maybe ask if you're trying to find an accountant? Just anything about like that process.
Yeah, I saw yours and Crystal's video on Monday, and there's so many different types of accountants who specialize in different types of things. So it's important that you understand what you want to get from an accountant and can that accountant provide it to you. So I also say to people, like, speak to a few accountants, because I think it's important that you kind of get along with the accountant. You're revealing very personal things. Finances are quite personal still, aren't they? They're quite taboo. And therefore, I think that you need to have that good relationship with your accountant if you're working with someone like me who wants to be involved more regularly rather than just at the year end.
Mm-hmm.
And if we don't quite, what did one of my clients say today? So, oh, we got referral, but I'm not sure if you two are a good fit. So you have to be a good fit with each other.
Yeah.
So I would speak to some different accountants and gauge what their services are. And the accountant is the specialist, so they should be advising you. They might say, actually, you're quite small at the moment. I think you maybe just need compliance-based work. Let's work with you to get you up to scratch. Or if you're getting bigger, they might say, right, I see what you need is more forecasting, more forward planning. And the accountant should be the one leading that because they are the specialist.
Mm-hmm.
So,
okay. And I think the fact you just mentioned about forecasting, I think is particularly important when we think about, actually, there is you don't become VAT registered tomorrow sort of thing. So this is one of the reasons, like, through this whole campaign, it's like, actually, I'm really trying to inspire people just that might be their goal in 2023, which is actually to increase their revenue to go to that point. You don't wake up tomorrow and go, I'm going to make an extra 30k in my business and it's going to happen. So actually there is some leading time to then prepare for all of the changes that will go alongside of it. So I suppose, is there anything from a more practical perspective that if you are like, actually, you know what, we've spoken about this, maybe I have been holding myself back for no reason, and actually it would be good for me to go through it, there's like some of the practical things you would need to be doing in preparation for actually going VAT registered?
So what I try to tell businesses is they need to be forecasting their revenue forward and looking at when they will need to become VAT registered. Because I've had a couple recently who have gone over VAT and not realised it, and it's like 4 months afterwards.
Oh wow.
And that's a problem. So forecasting your revenue, because when you can see that you're going to become VAT registered, you can start to plan things in. It might be, right, I need to increase prices. What's the price going to be? Okay, what impact's that going to have on my business? Am I going to lose clients or members? It's like, as in the gyms, are they going to lose their members? Right, okay, so what impact does that have? How many can I afford to lose? What price can I afford to be at? And by forecasting and looking forward, you can put these practical things in place and actually make plans. Like what price point are you going to be at? Is it going to be a 20% increase? Is it going to be a 30% increase? Like, what is the increase going to be? What's the impact? So one gym, I said, you need to increase your prices. They were like £20 a month below all the competitors. He was really worried. He did it. He lost 15% of his client base, but he's gained quite a lot of that back already. And because they're on that higher price point, he's actually better off anyway. So
I'm really, really glad you mentioned that, because that, I think, is also, that's probably the thing that people, when they think about, well, I'm going to have to put my prices up. And if they are a business that is like a business to consumer, so they know that actually it's not another business where they're going to be able to, the VAT doesn't make a difference to them because they're going to be doing their VAT returns. Or if someone's working with small business owners, and actually I've seen quite a few people where because they work with small business owners, which they know all of their business owners are not VAT registered, they're like, well, that's going to be a real actual physical cost to someone if I just slap the VAT on. They're like, I'm going to lose people. And I'm like, you may do, but it's not always like the end of the world. So I suppose, is there anything around that, like from a I suppose mindset perspective of being like, actually you can increase your prices and that isn't necessarily a bad thing? Like, we shouldn't all be scared basically of raising our prices.
So yeah, I guess there's practical things and mindset things. So practically, it was like I was saying, actually, if you increase the price and you lose, you can afford to lose a base of people before it actually impacts your profit anyway. And then you'll have more free time to service those clients and go out and get new ones. Yeah. So at the new price, which is exactly what that gym did. It went out and got new people at the new price. So it wasn't a problem. In terms of mindset, I think Crystal talked about it in terms of we can move up a scale. So we might be dealing with certain businesses when we first start out, and we might then grow and our price might grow. And therefore, maybe we do become too expensive for some businesses. Like, I know that I'm too expensive for some businesses, but that's okay. Yeah. Other businesses, maybe I'm considered a cheaper accountant. I don't know, but it's okay that you can't service those people anymore. you can maybe help them find another person to help. And you can go out and find those bigger clients who can afford your services.
So one of the things I think is like when you come to like raising your prices, and you mentioned like, so you could just put 20%, but you said actually you could do it like 30%, you could go more. It's like, actually, it's not at the moment that you go VAT registered, you just have to make the increase purely of adding on the VAT, if that makes sense. Like, actually you can use this as a moment to make choices across your business that are like also from an individual looking at the business, rather than just like what you have to do now because of going VAT registered. And I don't think I've heard that many people talk about that. I think most people just think, well, I'm just going to put that 20% on, and then that's just going to mean, whereas actually if you put 30% on, then you've got this new like 10% really of being to play with, so that if you do lose a few people, it can still balance back out.
Yeah, definitely. There's nothing. It's a good opportunity to review your prices.
Yeah.
The gym I was talking about, they actually had held a lot of clients at one price for years and years, and they used it as an opportunity to realign that. And yeah, some people grumble, but at the end of the day, most people were like, surprised you haven't done it earlier, to be honest. And there is no reason why you're trapped by that 20%. And then people go flat rate registered for that, and they're like, well, I've only got to pay 8.5% to the HMRC. So shall I only put 8.5% onto my price? And it's like, you can do, but it doesn't really work that way. And then explaining it to them. And I think that's where even more confusion can come in, because there's different types of VAT schemes, and it's understanding when to pay it over, and the paperwork and all this stuff just kind of builds up to causing like a lot of fear around the VAT process.
So in an ideal world, what sort of, I suppose, timescales to be able to do those things that you're saying about know in advance when you probably are going to cross over, so you don't cross over too early and then you get yourself in trouble, and also, like you said, then be able to properly like think about what your price would be next. Like, what would you be advising if someone's like watching this now and they're thinking, right, I want this to happen, I'm going to try and go for this next year? What is actually a bit of a realistic timescale to start thinking about the things that need to get put in place?
So most of mine, you can start seeing the can't think what it's called, like you can see that their sales are picking up, and it's usually over about a 6-month time period that you can see that the sales are building. And it's like, if you keep at this rate of growth, you will hit it at this point. But there's no reason why you couldn't think, oh, I want to hit that threshold at the end of the year and start.
Oh yeah, I know I'm just a very like really,
I think like 6 months. Yeah.
Okay. So it's what, as I said, it's absolutely, like you said, you could do, especially in like the world of the people that I help, you absolutely could do a launch, and just that launch alone would put you through the VAT threshold. So it's not as if you cannot. I think it's just, I'm definitely someone that's around like sustainable growth, and also there is also implications of you growing too soon and then you actually haven't got all the resources to actually support that growth. And so that's why I think having, more the average sort of conversation of someone who is growing that, which might just mean they pick up an extra 1 or 2 clients each month, they keep growing, rather than being like, yeah, let me do a big New Year's Day launch, make the money, happy 2023.
Yeah. And then like you say, you find out you haven't got the foundations in place to make that business stable. And that's what I found with businesses around the VAT threshold, 100k kind of size, is they suddenly realize that the financial foundations are not there. They haven't got the processes in place. They've kind of been freewheeling their accounts until now, and not taking advantage of the tax things available to them. They're not forecasting. They haven't got a cash balance in place. Those kind of things. Then if the business grows too quickly, it will start to like crumble, or like, it'll be impacted quite a lot.
Yeah, no, I think having that really solid foundation is like, it's absolutely what I believe in. And I think that's why I'm trying to not say like go for this overnight, because actually because also the thing is, I've definitely heard of businesses that have gone over that threshold, they've registered for that, and then business has turned and then they've gone their sales back down. It's like, that's not what we want. Like, we absolutely want to be able to go through and continue to keep growing, not to just like hit a wall. Now I'm going to throw in a massive curveball based on a question that was put on your post today, which was about the fact that I can't remember who it was that was saying, well, maybe we should just be bringing the VAT threshold down altogether so it's not as high. And the UK is like, it's definitely higher VAT threshold than like it is in some other countries. So I just would wonder your opinions on whether, like, actually, do you think the amount that we have in the UK like is right? Like, do you think it should be lower? Like, I do think it's really interesting that because it's sort of the level that enough people that run a business by themselves can feel quite comfortable to sit underneath. Like, you can say to yourself, okay, like, I can make 6k a month, that's like what, 50k, no, 72k a year. I can sit under my VAT threshold, and actually, like, that's okay. Like, it's not low enough, and I think that's why we get this bottleneck of so many people that are sitting underneath it. So yeah, should we scrap it? Should we lower it? Should we hire it? Like, this is just a random put you on the spot here.
I personally think it needs to be increased, because
Okay.
it's been at that level for so long.
Yeah.
We've had price increases over the years, and massive inflation now, so businesses are having to pump their prices up. But let's say a lot of the gyms I work with have really, really high overhead costs.
Yes.
They've got high rents, staff, all the machinery they buy, the equipment to go in a gym could be like 100 grand. So those businesses are at a point where they're not making masses of profit at that level, or any,
Yeah.
but yet they're getting this VAT threshold problem, and a lot of them are going, oh, I don't want to put my prices up because I'll go over VAT threshold, and then everything is VATable. Whereas we could either increase it, or we could go down a route of like the personal allowance, so you don't pay VAT on the first 85k.
Mm-hmm.
And then you pay VAT on or the first 50k.
Yeah, I heard someone suggesting that one. I quite like that idea of, therefore then it's just like all the additional money you're making, you're paying your VAT, your tax on. So actually that fits with the way that most people's mindset like works. However, you can argue how many people are purposely still sitting under becoming a higher tax bracket person. So we could still have the exact same problem.
Yeah, we'll have it when they change the corporation tax in April. We're going to have the same thing. How many businesses are going to sit at £49,999 of profit in the year? We'll all get these artificial brackets that we put on ourselves.
And I think obviously what you're spoke about probably is slightly different to the world of like the person's probably watching this, in terms of someone being like, they run a business by themselves and they might have very, very low overheads. So most of the type of people that in my world, I'm like, they've got some software, they've got business insurance, they might be paying like a coach or mentor or something, but that could be pretty much it. Like, they sit at home, they've got a laptop, they've got a phone, that is how they run it all. And so also when they think about that, it's not someone that's got machinery, paying lots of things, and they're like, well, I've got all these things that I can claim the VAT back off, because they're like, actually I'm not gonna. So I suppose if you're someone that, if in that situation, is there anything else to be considering that is different? Because it's like, yeah, actually my overheads are really slim, and I'm actually not going to get very much of a VAT reclaim from that.
So when you first go VAT registered, you can choose to go standard rated or flat rated, and depending on the industry you're in, the percentage differs, and depending on how many costs. So they'll probably be classified as a limited business, so they'll be at 16.5%, which is what they've got to pay over to HMRC every quarter, or whatever scheme they're on. And yeah, I guess this is why understanding how your business is going to grow and where it's going to go is so important, because if you're going to literally hit 87k and that's where you're going to stay, there's pretty much no point going over the VAT limit, unless you can pass that VAT on, and therefore you not have a cost increase. But if you're like, right, I'm going to hit 150k, I'm going for 200k, like, just go and do it. Like, the VAT's not going to impact you, and it's just going to hold you back. But if you're going to go and smash it, then just go.
But I'm really glad that you mentioned that thing about, well, if you're only just going to go over it. And I think this is why, I know you mentioned like you do work with some business owners that are trying to get to that 6-figure thing, and actually the 6-figure mark always, as a British business owner, always bugged me, because I was like, this is clearly so American. Because actually, if I just make 100k, that don't make no sense. Like, actually, you are like, it is a thing of like, be it 85 or go 125, 150, 170. Like, actually, if you're only just going over it, then it's not gonna. But what I think I'm worried about is then the people that then, if you build your business model. So I actually definitely have had someone since I've started this series in my DMs that purposely was like stopping themselves at like 6.5 a month, so they're at that like 72 to 78k. And I was like, the thing is, then if you're not even building a business model that can get you to like 85, 90, 100, then you're definitely not going to have a business model that's going to take you above that, because you've got that block already. And that's the thing, I think, isn't it, is that like, yes, there is a point where it definitely won't be beneficial, but for many people, once they go through that, they'll just continue to grow.
Yeah, we do. We put these artificial blocks on ourselves, and that could be something we've learned in childhood, something our parents have said to us, something in the news, something someone down the pub's said to us, and we've clung on to it in our head subconsciously and thought, oh yeah, no, I don't want to do that. Going VAT registered is really bad, and it can block you. And like you said, if you can get past that block, then it might be that your business suddenly skyrockets. I think I remember when I started out, I was like, right, I want to earn what I earn employed.
Which
And
is
suddenly putting this
most
like
people, yeah, that's the most common. Like when I start with people that are just starting a business, that's the most common thing. I always check with people like, what are your financial goals? And it's just like, well, you know, if I want to make it the same as I earn, and I'm just like that. And also, depending on what you did originally, that can be like so limited. And I do find that a really interesting one, because there are people I'm like, what you did before can have no shape or form on the possibilities of what you can do in your own business now.
yeah, and you've got unpaid holiday, unpaid sick leave,
Yeah.
no pension. You've got like no, so you want to be earning more, and it's hard work owning your own
Mhm.
business at points. You know, it's a roller coaster, isn't it? So
Absolutely.
we shouldn't be putting these barriers in front of us.
No. So one of the big reasons is like, I'm definitely not doing this series just to be like, go for VAT, just to be VAT registered and pay for an accountant to do extra paperwork for you and all do all that. Actually, like my big ultimate aim of it, sorry, I don't want to take all the work away from you, but ultimately the aim is actually being able to have the business owner to have the more money within their business, which obviously then will enable them to like have better like reserves so they can ensure the future of their business better, and to have more money to be able to pay themselves better, hopefully actually properly contribute to their pensions and all those things. And we did have a question for last, we had someone that mentioned before about this idea of like, well, I went through that, and actually someone I'm talking to earlier did exactly the thing where she grew her business past VAT, but then she didn't actually end up paying herself properly. Like it didn't end up being more beneficial for herself. She ended up paying herself less. And suppose if you are someone that's like, right, let's do this in the right way, like you'd already said, we need to do some forecasting. Like, what are the sort of things you do need to be really keeping an eye on to make sure that this isn't just like actually the business grows, but you don't personally benefit from it?
Yeah, I do see business owners that have 150 grand businesses and they don't pay themselves anything.
Yeah.
And it's called like, is it lifestyle creep? It's like, I have it a lot with gyms. They think, I need this new piece of equipment. That's gonna get me more members. Or solopreneurs are like, to be fair, until I went through mindset coaching and stuff, I was like this. If I just get this next qualification, like that is going to get me where I need to be. And I was just spending money. So even though I was getting more money in, it was just coming out. So what I do now is I create like pots. And in those pots, I separate the money out, and I have like a training budget and a marketing budget. And it kind of prevents me from going, let's just do this and do that, and therefore take home less for myself. And I guess because I come from an accountancy perspective as well, I would look at how you're paying yourself, and making sure it's efficient, and making sure you're planning it in, and putting yourself first. Because there's no point
I
in
mean,
business.
what you're talking about, for example, really just reminds me of like everything you read in Profit First. This idea of like actually having parts, setting aside the money you're going to be taking home in the business, working out everything else. But I suppose one of my things is like, yeah, you're really like numerate and confident with your numbers and all that stuff, which is the same as me. And like I have all those spreadsheets because that's the type of thing I like to do on a weekend. But for someone who we know might not be as confident, like actually, and this is where I think sometimes like that you don't necessarily get that from your accountant. And like that's where sometimes, like you're saying, if you've got an accountant that's just like compliance, you could go back registered, you could be absolutely doing everything from a like legal perspective of doing it right, but you are ending up with less. So it's like, actually, what can the individual be doing? Like, is this conversation, like, is there a specific thing you should be asking for your accountant to be doing with you? Is this something you have to go somewhere else? Like, I think just to give some points for some practical, like what someone would need to do next, basically, to make sure this doesn't happen.
So make sure they're taking home enough of the
income.
So
making sure they actually can even start to look at how, just in case they do have an accountant that's like, that's not their accountant, does their end of year like in the accounts, that's it. It's not as if they're doing all of the other like financial planning side of things with them.
So there's some accountants that will do that. So like me and Crystal will do that kind of stuff if people want those added services. Or there are, I guess there's goals coaches. there's different people that you can approach. There's like finance director, or like part-time. I know it sounds scary, a finance director, but
Yeah.
you can get part-time finance directors who just come in for like blocks of time, who can work through that stuff with you. Or you can have them kind of on a retainer, so they come in bit piecemeal to help you. And like books like Profit First, I think it's written relatively in a clear fashion.
No, it's a really good book. It's so funny. So I don't use it within my own business, but I do recommend it a lot. But I was just like, I'm on top of my finances already. But I always think for someone that isn't, it is a very good system to start really being able to look at like your finances, what you're paying yourself, how does it all move within the business. And now that we've got like even more like great digital banks that will enable people to be able to separate their money a lot easier, I think it's easier. This is the thing. I think there's this whole thing. There's just like all your money sitting there, and then it's like everyone takes all the money, and then you're left with what a lot of people just put themselves last. And that is that thing I did. Like actually, when we're looking for this growth, how are we properly planning what that means for you? Like, is this an incremental, as the business grows, you're just getting a percentage, or is it like clear blocks? And also like sometimes you can't take that growth. Like you cannot get it straight away, that's fine, but it's this idea of what you are doing over the long term. So I don't think for some people, like they will make a conscious decision to say, actually I want to like retain the profits and keep that in the business, and like that's fine on a short term, but we just don't want to be doing that on a long term basis.
Yeah, definitely. I use Starling Bank, so I have little spaces in my bank account where I put say software, so I save my software costs, I save my tax, and I have a little profit account, so I keep some of my profit in the business in case anything unexpected was to happen. So they're kind of things I guess people might be able to do if they're not quite spreadsheety type people. They can use, because the problem is you see the cash and you think that's my money, but actually especially if you're VAT registered 3 months down the line, you've got to remember that you've got to pay HMRC that money.
I mean, it's the same. It's like exactly the same thing. So I'm always really like, literally, I exactly the same as you. I've got Starling, I've got my pots, and like, I take my tax has gone straight away. And I'm like, that's what happens with VAT. Like VAT literally should be like, you get paid, your VAT goes into that other account. Like it is gone straight away because that is not your money.
Yeah.
So bye-bye.
It's not yours. It's like when you think, you say, I earn £100. Actually, no, you've got to pay this over to someone else. So actually, you're left with X. And
so it's been so lovely. I'm really, really glad you come on, and thank you. As someone, as I said, like I know, like I really want to talk to an accountant to actually start to do these things to help people, because I know it can be hard to have that conversation to find the right one. And then, as we've already identified, even if you've got one, that doesn't mean they're providing you with all the right services, and you don't know what to ask for necessarily, and all those types of things. But as you know, this is part of a series, and at the end, I want to be able to do a wrap up to be like, these are the main things that all of our speakers have spoken about in terms of being like, what you should be doing next, what's a tip. So if you are someone that's like been inspired, you're like, yes, I definitely want to like I'm going to get rid of this mental block, I'm just going to keep growing my business, and when I go through that, I go through it, it's all good. What would be just a piece of advice or a tip you'd give them?
So for me, it's always planning, forecasting and budgeting. So now, what's your income? What do you think your income's going to be for the next 6 months? When will you hit that threshold? When do you need to apply? It's 30 days after you've hit that threshold.
Okay, that's good to know.
And get your bank sorted so that it's like in the sections and you can start saving it. So if you think you're going to hit it in 6 months' time, you've got 6 months to get comfortable with it, find an accountant who can help you, and put some processes in place.
Okay, that's cool. Well, thank you so much, Debbie, for joining me. I have loved talking to you, and I hope everyone has joined the series. As I said, this is the second of the series. There are 3 more videos that will be coming, so be sure to follow me so that you can find out what is coming up next. Bye-bye, Debbie.
Bye.